The year 2025 began with cautious optimism in global trade. After years of uncertainty, businesses and governments alike hoped for a period of stability and growth. Shipping lanes buzzed with activity, and international markets seemed poised for a rebound. But that calm shattered in April, when a single announcement sent shockwaves through the global economy. The Trump administration announced a sweeping 10% tariff on nearly all goods imported into the U.S., signaling the end of predictable trade. The move was unexpected in its scale and scope, affecting everything from electronics to raw materials. By July, the administration demanded bilateral trade deals from over 20 key partners, negotiate by August 1st, or face even steeper tariffs. The world's largest economies were suddenly thrust into a race against time, scrambling to protect their interests. The message was clear: leverage the power of the American market to force concessions. The U.S. was no longer content to play by old rules. It wanted new terms, and it wanted them fast. For other nations, it felt like economic coercion: accept U.S.-favored deals or risk crippling tariffs. Allies and rivals alike were caught off guard, forced to reconsider their strategies overnight. The global trading system built on cooperation was fundamentally challenged. Decades of painstakingly negotiated agreements now seemed fragile, even obsolete. Companies scrambled to assess the impact. Would their supply chains survive? Boardrooms filled with urgent meetings as executives tried to predict the next move. Would products assembled abroad still be competitive in the U.S.? Retailers and manufacturers faced tough choices about pricing, sourcing, and even survival. Even transshipment through third countries like Vietnam faced potential 40% levies, closing off workarounds. The usual tricks to avoid tariffs were suddenly off the table, leaving few options. The world held its breath, waiting to see who would blink first. Financial markets teetered, and uncertainty rippled through every sector. The era of steady, rules-based trade was over. The institutions that once kept global commerce predictable now seemed powerless. A new, volatile chapter had begun, one defined by uncertainty, rapid change, and the constant threat of economic conflict. Japan was among the first to strike a deal, moving swiftly as trade tensions with the United States reached a boiling point. The stakes were high, and both sides knew that the outcome would set the tone for global commerce in the years ahead. On July 24, 2025, the two nations announced a landmark agreement that would reverberate far beyond their own borders. The world watched as the details emerged, signaling a new era in international trade negotiations. At its core was a massive order for 100 Boeing airplanes, a staggering commitment representing billions of dollars. In exchange, Japan secured crucial exemptions from punishing tariffs that threatened to upend its economy, but the deal didn't stop there. Japan also pledged to purchase $8 billion worth of U.S. agricultural products, opening its markets wider to American farmers and ranchers eager for new opportunities. The agreement included increased imports of American defense equipment and rice, further deepening economic ties between the two allies, and providing a boost to key U.S. industries. These were tough concessions for Japan, especially for its powerful auto and electronics sectors. But the alternative, crippling tariffs on cars and electronics, was unthinkable for Japanese leaders, who feared massive job losses and economic instability. In Washington, officials framed the deal as a major victory for American workers, touting the surge in manufacturing jobs and the revitalization of the aerospace sector. The agreement was hailed in the media as a model for future trade negotiations, a template for how economic power could be leveraged to achieve national goals. For Japan, however, the mood was far more somber. Relief, not celebration, defined the atmosphere, a costly move to avert a looming crisis and maintain stability. The deal set a precedent. Headline-grabbing purchases of iconic U.S. products had become the new price of avoiding tariffs, reshaping the rules of global trade. Other countries, especially those with less economic clout than Japan, now faced immense pressure to follow suit, scrambling to secure their own deals and avoid economic fallout. The global marketplace was shifting rapidly, moving away from the ideals of free exchange and toward a new era of high-stakes bartering and strategic purchases. In this new world, Boeing jets had become the ultimate bargaining chip, symbols of power, leverage, and the changing face of international trade. Indonesia, facing the threat of a punishing 32% tariff on its exports to the United States, found itself at a crossroads in 2025. The stakes were enormous. A tariff hike of this magnitude could devastate Indonesia's economy, disrupt jobs, and send shockwaves through its industries. In a race against time, Indonesian officials rushed to secure a pact with the US on July 15, 2025, hoping to avert disaster and stabilize their economic future. The resulting deal was massive. Indonesia agreed to purchase 50 new Boeing jets, including advanced long-haul models, a move that would reshape its aviation sector for years to come. But airplanes were just the beginning. The agreement also included $15 billion in U.S. energy products, oil, gas, and more, ensuring American companies a foothold in Indonesia's growing energy market. On top of that, Indonesia committed to importing $4.5 billion in American agricultural goods, from grains to soybeans, further deepening economic ties. In exchange for these sweeping purchases, the U.S. agreed to lower the tariff to 19%. It was still a steep price, but for Indonesia, it was the difference between survival and collapse. The power imbalance in these negotiations was impossible to ignore. The U.S. held most of the cards, and Indonesia had little room to maneuver. For Indonesia, the choice was stark: accept a painful, lopsided deal, or risk economic catastrophe and social unrest at home. These massive purchases weren't driven by market demand or business strategy, but by political necessity and the urgent need to keep trade flowing. Investors took notice. Boeing's stock barely budged, a sign that Wall Street doubted the long-term sustainability of such politically motivated orders. The deals were real, but the underlying health of the global economy remained fragile and uncertain, with many questioning whether these deals could truly restore stability. In reality, these orders were symptoms of a deepening trade war, not a cure for the economic tensions spreading across the globe. Indonesia's experience made it clear: gaining access to the U.S. market now required massive, politically directed spending and a willingness to make tough sacrifices. The new trade reality was unmistakable: buy American or pay the price. Countries everywhere were being forced to adapt to this shifting landscape. The world's economic order was being rewritten in real time, with new winners and losers emerging from the turmoil. For Indonesia, and for many others, economic stability came at a steep and lasting cost, one that would shape their future for years to come. For Boeing, summer 2025 brought a surge of orders: 150 jets from Japan and Indonesia alone. These were multi-billion-dollar contracts, keeping production lines busy and boosting short-term prospects. But these weren't traditional sales, they were political deals, forced by governments desperate to avoid tariffs. The sustainability of this demand was uncertain. What if political winds shifted? Investors saw the risk. Boeing's stock stayed flat, even as orders poured in. The company was thriving in chaos, but that chaos was its greatest risk. The foundation of these sales was political, not market-driven. Boeing was winning the order battle, but the wider trade war threatened everyone. The future was anything but secure. Politically driven aircraft orders sent shockwaves through the airline industry. Airlines, forced to accept new jets, scrambled to find crews and routes for planes they hadn't planned for. This led to a glut of capacity, driving down ticket prices and hurting profitability, even for US and European carriers. The unpredictability made future planning nearly impossible. A 45% drop in Chinese smartphone prices to the US in June 2025 signaled broader disruption. Less cargo and fewer business travelers eroded airline revenue models. Passengers saw routes canceled or replaced by unsustainable, subsidized flights. The global aviation network, once finely tuned, was under immense stress. Boardrooms everywhere struggled as political deals, not market needs, dictated the future. Modern airplanes are marvels of global cooperation, with parts sourced from dozens of countries. The new U.S. tariff policy threw this system into chaos. A single part from a tariff-hit country could disrupt production and drive up costs. Manufacturers like Boeing and Airbus scrambled to audit and reroute supply chains. Tasks that normally take years now rushed in weeks. Retaliatory tariffs from other nations added layers of complexity and cost. The result: higher prices for airlines and travelers, all due to political conflict. Uncertainty became the biggest challenge. Should companies invest in new suppliers, or wait for the next trade deal? Long-term investments stalled, and focus shifted from innovation to managing political risk. The global supply chain fractured into regional blocks, making everything more expensive. International collaboration was giving way to protectionist fragmentation. With Japan and Indonesia setting the precedent, attention turned to other nations in the tariff crosshairs. Vietnam neared a deal, likely involving major U.S. purchases for tariff relief. The threat of a 40% levy on transshipped goods gave the U.S. strong leverage. EU negotiations were more complex. Agricultural subsidies, digital taxes, and the Airbus-Boeing rivalry stalled talks. A full-blown tariff war between the US and EU loomed, threatening the global economy. China's talks were equally tense, with deep disagreements over intellectual property and market access. Any deal with China would be massive, but mistrust made quick resolution unlikely. Each new deal increased pressure on regional competitors to follow suit. The global trading system was being reshaped by a series of US-dictated bilateral deals. Nations scrambled to adapt, as multilateralism gave way to transactional diplomacy. For travelers, the impact of trade wars is becoming personal. Ticket prices are rising as tariffs and supply chain chaos drive up aircraft costs. Airlines forced to take on new jets, launch aggressive routes or cut existing ones, destabilizing the market. Travelers in mid-sized cities may lose direct flights, facing longer, more complicated journeys. Airlines cut back on service and amenities to offset unpredictable revenue and rising costs. Older planes stay in service longer, ancillary fees increase. The overall quality of travel declines as airlines focus on survival, not service. The biggest loss is predictability. Routes and prices can change overnight. Planning international travel is now riskier and more complex. The freedom and ease of global mobility are under threat from rising protectionism. Looking ahead, the future of global aviation is turbulent and uncertain. Continued protectionism could fracture the industry into regional blocs, making international travel more complicated and expensive. Airlines may compete based on political alliances, not service or price, turning them into instruments of state policy. Boeing and Airbus face new risks. Trade wars could spur nations like China to build their own aerospace giants. The result: fragmented supply chains, less innovation, and fewer choices for consumers. Yet, a return to multilateral negotiations could restore stability and predictability. The choice between chaos and cooperation is being made now, in negotiating rooms worldwide. The final destination for global aviation remains uncertain,